Money, your stories, your freedom. The Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff on the Peter Schiff Show, schiffradio.com. And as expected, the European Central Bank, otherwise known as the ECB, raised interest rates by the anticipated 25 basis points, which is what I said they would do yesterday. This is not the end of it. This is the beginning of a cycle. They will continue to raise rates a quarter point at a time. I think they should be more aggressive. But there are many people on CNBC today. Steve Leisman keeps reading this quote from Michael Darda, where he says, this is going to be disaster for Europe, that there's going to be a hard landing now because of this aggressive hikes. He's got to be kidding. I mean, the hard landing is going to happen in the U.S. And in fact, I don't even think we can call it a landing. I think we're going to call it a crash. Higher rates is not going to hurt the European economy. It's exactly what the European economy needs. In fact, they should be higher. What they need is less government spending. They need to stop bailing out bankrupt countries. They need to let the market function. But by keeping interest rates artificially low, they just create bigger problems. And at least the ECB understands that. The incompetence at the Federal Reserve either don't or simply are lying. The ECB also the Bank of England, they left interest rates unchanged. They should be hiking rates. They are way behind the curve in the UK. Interest rates there are 0.5%, right? Not quite as paltry as our 0 to 25 basis points, but 0.5%. That is one of the reasons why I don't own pounds, or we don't recommend pound sterling we don't have it in our funds. We don't recommend it to our clients because they're making many of the same mistakes as the Fed is making. They're just making them on a smaller scale. In the currency markets today, the euro is actually slightly lower against the dollar. You know, there's a Wall Street trading adage, you buy the rumor and sell the fact. So there were rumors of a rate hike. Now we had the confirmation, so you get some profit taking. But other currencies are up. The Australian dollar, for example, is up to a new record high against the dollar. You now need $1.05 to buy 1 Australian dollar. Gold stocks are climbing. Gold prices are flat. Again, you have a central bank raising rates, and gold is not responding by falling. You know, a lot of people are saying, well, gold is going to start to fall as soon as the Fed raises rates. Well, why? It's not falling when the ECB is raising rates. It didn't fall when China raised rates. In fact, it rose when China raised rates. So, you know, and the reason it's rising is because the rate hikes are too small. Anyway, I want to remind everybody about my TV appearances today. I will be on Freedom Watch with Judge Napolitano. He is there, back from vacation. And I'll be on tonight at 8 p.m. Eastern Time. Also, I'll be on Fast Money today at 5 o'clock. And, you know, the guys on Fast Money always like to give me a hard time, particularly after I leave. Well, I'm going to try to turn the tables on them this time because the reason they invited me on, and it should be a very funny exchange, so you should make sure to tune in 5 o'clock on CNBC. They are bringing me in because they want to do a segment on when are the bears going to throw in the towel, right? When are we going to give up being bearish and be bullish and buy stocks, right? Now, I'm going to turn the tables on them. I'm going to say, look, you shouldn't be asking me when I'm going to throw in the towel. You should be asking the bulls when they're going to throw in the towel because they've been wrong for 11 years. Now, of course, they're going to jump all over me. What do you mean we've been wrong? Well, 11 years ago, I was bearish on the U.S. economy. And what did I do with my money? What did I recommend that other people do with their money? Well, one thing I did was say buy gold and silver and buy gold and silver mining stocks. Well, what's happened? Well, I mean, if you just look at the Huey index, you know, the Huey index, the HUI, 11 years ago was under 50. I mentioned this on the show yesterday. Today it is at over 600. That's a 1,200% increase. So if somebody was bearish 11 years ago on the U.S. economy, and because they were bearish, they decided to buy gold and silver mining stocks, something that no bull would ever do, they're up 1,200% if they bought that index. Well, what are the bulls up? The people who are so bullish on the U.S. economy, they loaded up on the S&P 500. They're down. In 11 years, they're down. And if you adjust it for inflation, even if you use the CPI, they're way down. You know, the Dow Jones would have to be, 120,000 right now, probably higher than that, to have kept pace with the Huey over the last 11 years. So I'm going to turn the table. I'm going to say, when are the bears? When are the bulls? When are they going to throw in the towel and buy some gold and silver? So we'll see what kind of sparks might fly as a result of that discussion. So it should be kind of interesting. Also, I want to talk about this article that I read that was written by Robert Reich, former Secretary of Labor, frequent guest on Kudlow and Company, and he has an article out. And let me see where it is, because if you can go pick it up and read it. It's in here's the my tabs are slow. It's in April 6th. What is this piece? Well, just Google Robert Reich, Why We Must Raise Taxes on the Rich. This is the title of the article. And basically, Reich lays out a case that the only way to solve our problems is to have huge tax increases on the rich. Now, I'll give Reich credit for one thing. He says that we also need to cut military spending, which is true, and we need to cut some corporate welfare, such as subsidies for agriculture, farm subsidies. So he's got a couple of things right. But everything else he's got wrong. And he has two main arguments for why we have to tax the rich more. One is the big wealth disparity between the rich and the poor. Well, you don't make the poor richer by making the rich poorer. The rich make the poor richer. They use their riches to grow the economy. So the only way the poor are going to get richer is if the rich get richer too. If we soak the rich, we're going to drench the poor. That is the problem. Now, another problem, though, is there are a lot of people today are getting rich for the wrong reasons. And that's not the fault of capitalism. It's the fault of government and the central banks. When people on Wall Street are getting rich, everybody else is getting poor. That's because the Federal Reserve is transferring wealth from Main Street to Wall Street with cheap money funneling through the banking systems. If the Fed raised interest rates and we had a real market for credit, then credit would flow to productive businesses, not Wall Street speculators, and they would use it to grow the economy and to provide the jobs that Robert Reich knows that we desperately need. So he's wrong on that account. And his second argument is to say, well, in the past, the rich paid much higher taxes. The top rate was, at one point, was 91%. That it was about 70% even in the 1950s. And that now it's only 35%. And so the rich are getting away with murder. Well, first of all, he's wrong on a number of accounts. First of all, back then in the 1950s, very few, if any, states had income taxes. So you weren't paying federal income taxes and state income taxes. You were just paying federal income taxes. But number two, you had all kinds of deductions. Nobody actually paid 70% of their income in taxes. I mean, if they did, they wouldn't even work. No one's going to work for 30 cents on the dollar. I'll give you an example. Back in the 1950s, let's say a doctor, and I'm just going to use today's numbers as, because obviously people didn't earn as much money back then because the cost of living was lower. But if we still had the tax code of the 1950s, and I would prefer that tax code. I would rather have the tax code back then than the one we have now, even though the rate is higher, because I would pay a lot less in taxes. And here's why. Let's say you have a doctor that makes $500. I'm running out of time for this segment, so I'm going to have to pick this up after this commercial break. So don't go away. We got a lot more of the Peter Schiff Show coming up on SchiffRadio.com, the gold standard in talk radio.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America. We're sorry. Peter Schiff is back on the air.
Welcome back. This is Peter Schiff, and you are listening to the Peter Schiff Show on SchiffRadio.com. And before the break, I was discussing Robert Reich's article on soaking the rich as the solution to our problems. And number one, he said you want to tax the rich because there's a big income gap, and we wanted to equalize that as if taxes would do it. The other reason was that he said that the rich are just not paying enough because they used to pay much higher taxes. And my point is, no, the rich now are paying more in taxes than they did when the rates were 70%. The government collects more income taxes from the rich. And here's the reason. And I would prefer, as I said before the break, I would take the 1950 code with a 70% top bracket over the one that we got today. because I would pay much less taxes. And the reason is this. Let's say there was a doctor, or if we had today's code, if you were a doctor and let's say you earned $500,000 a year as a doctor, and you also had other investments. Let's say you owned some rental property, and the rental property was depreciating. Let's say you had some oil and gas investments, and you had depletion allowances there. Maybe you had a couple of racehorses, whatever. You had other businesses, and those businesses were generating non-cash losses. You were able to use those losses to offset your income as a doctor, and you can eliminate almost all of your tax. In addition, other things were deductible. If the doctor belonged to a country club and he was a member of a country club, in order to get patients, he could deduct his country club dues. If he entertained a lot, he can deduct 100% of his entertainment expenses. There were all sorts of things. And then businesses used to have other types of companies that they would set up, and they would run all sorts of personal expenses through as the tax deductions, things that you can't do anymore. Today, if you have a doctor and he makes $500,000 as a doctor, and he loses another $500,000 on other investments, he can't write the $5,000 loss off the $500,000 income. He can write $3,000 off. So he's paying a huge tax. If we tried to impose 50%, 70% tax rates today with today's tax code, right, nobody would work. Who would work? Would I go to work for 30 cents on the dollar? Not on your life. Now, would I shut down my business completely and fire all my employees? I don't know that I would do that, but I certainly would stop working to grow the business. I would, whatever income it generates without me having to do anything is pretty much what I would get. But I would also try to run up my expenses. So, for example, I might go out and buy a corporate jet. Why not, right? I mean, why give the money to the government? I might as well buy a jet. I'd spend my time flying around the world, researching companies, going to meetings. Maybe I'd get myself a corporate apartment in Paris, maybe another one in Buenos Aires. In other words, I would spend whatever the company earned on whatever I could deduct legitimately, so that I had very little money left over from which to pay taxes. And the net effect would be the government would collect less in taxes from me at 70% than they do right now at 35%. And of course, if we can have the old tax code back, I could probably find a way not to pay anything. Now, one of the reasons that Reich thinks the rich are getting away with murder is because he says, well, they earn a lot of their income from dividends and capital gains, which is only taxed at 15%. Well, the dividend tax of 15%, that's disingenuous, because in order for the corporation to pay that 15% dividend, it first had to pay a 35% corporate tax. Now, I know some of these corporations are able to get away with not paying them, but a lot of others pay these taxes. And so the rich person is not paying 15%. He's paying 50% because he paid 35% when the corporation earned it. Obviously, if the corporation didn't have to pay that corporate income tax, it could have paid him a much bigger dividend. That's why, Warren Buffett, for example, Berkshire Hathaway pays a lot of taxes. Yet Warren Buffett himself only pays 15% in taxes because he doesn't take a salary. He takes everything in dividends. And now he pretends that he feels bad because his secretary is paying higher taxes than he is. That's not the case. He's paying higher taxes than his secretary. If you look at all the taxes that Berkshire Hathaway pays on Warren's behalf, he's paying a huge tax rate. And also, of course, he is advocating that we have a higher inheritance tax. Well, a higher inheritance tax isn't going to raise a lot of revenue for the U.S. government. It's actually going to backfire because it destroys economic growth. And another thing, he is talking about the fact in his article, he mentions that there are Americans that are unpatriotic, and he said he recognizes that some unpatriotic Americans might leave the country to avoid these taxes, and he says basically, good riddance, let them go. Well, first of all, if they could go, it would be our loss, not theirs. But number two, they can't go. Right? Even if I wanted to give up my U.S. citizenship, if I wanted to renounce my U.S. citizenship to avoid higher taxes, I can't afford to do it. There is an exit tax if you want to give up your U.S. citizenship. And it shows you how oppressive the country is, because they have to tax you if you want to leave. So a U.S. passport is now considered a liability that you have to pay a tremendous amount of money. And so here's why I can't leave. If I were to leave, and this exit tax applies to anybody who has at least $2 million in assets or has earned at least like $130,000 a year for the last 5 years. So it's a pretty low threshold. And what it says is that if I wanted to renounce my U.S. citizenship, I would have to pay a tax on all the unrealized gains on all my investments, including my private businesses. I would have to figure out what they're worth relative to my cost basis and pay an ordinary income tax of 35% of all of that gain. Now, I cannot afford that. I don't have enough liquidity to pay 35% of my net worth in taxes, because a good chunk of my net worth is illiquid. It's tied up in the value of my business holdings like Euro Pacific Capital. So the only way I could give up my citizenship would be if I liquidated my business first, right? And then gave the government their ransom money. Now, I've been building up this business for a long time. I don't want to just throw it away. And not that I'm anxious to give up my U.S. citizenship. I'm just saying that I couldn't do it even if I wanted to. And as income tax rates get higher, giving up your U.S. citizenship becomes that much more expensive. If they raise rates to 50%, well, then you'd have to give half the value of your assets to the government in order to leave the country. So the rich can't leave as easy as he thinks. Now, who can leave right now are the younger people, right? The people that don't have a lot of income but that have skills. They can leave. You know what? Maybe in the future, they won't be able to leave either. I'm willing to make a wager that at some point in the not-too-distant future, it'll be illegal to leave the country if you have any student loans. I mean, if you want to give up your U.S. citizenship, you will have to repay all of your student loans first before they'll let you renounce it. And, they might have other things that say that you can't leave, because at some point, the labor, the young people who are highly motivated and want to work hard, they're going to be looking to leave the country, and the government's going to want to keep them here so that they can tax them. Anyway, don't go away. I got my guest coming up. I forgot to mention after the break, we got Robert Kiyosaki, author of Rich Dad, Poor Dad. He's coming up. We're going to talk about his latest book, and then we'll be taking your calls on the Peter Schiff Show, schiffradio.com, 855-472-SCHIFF, or 855-4-SCHIFF. Don't go away. We'll be right back.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio, the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff on schiffradio.com. And joining me now, noted author Robert Kiyosaki, who authored the phenomenally best-selling book, Rich Dad, Poor Dad, which I think has spawned several sequels. His most recent book is Unfair Advantage, The Power of Financial Education. I've got a copy in my hand right now. I'm holding it up for those of you who are watching on the video stream. Anyway, Robert, welcome to the show.
I'm honored to be on your program, Peter. You have a very good reputation in my world, at least.
Thank you. So now, how many copies of Rich Dad, Poor Dad have you sold?
Almost 30 million worldwide.
I mean, that is an incredibly impressive number, especially for a nonfiction book. I mean, my book, Crash Proof and Crash Proof 2.0, I think total we've sold, maybe about 200,000 copies.
That's pretty good.
But you've sold, 20, 10, 100 times as many copies.
Well,
what do you attribute that success to?
Well, I think, you could call it, under a broad term, the truth, if you know what I mean. We get BS'd a lot by our government and our school system. And, people don't want to live below their means. They don't want to listen to Susie Orman about cut up your credit cards and live like a peasant,
Well, I would agree that, credit card debt is not the way to get rich. And I know you make the point in your books, and you make it again. I haven't read the entire book, Unfair Advantage, but I did read about the first third of it. That you make the point, which is correct, that in an inflationary environment like the one that exists today and the one that has existed in this country for many years, one of the ways to get rich is to use that to your advantage by borrowing money to acquire income-producing assets that service the debt so that you have positive cash flow, but that you own assets that will then appreciate that you didn't have to pay for.
Yeah, that's correct. It's never changed. An unfair advantage, the real positioning statement is what school will never teach you about money. And they'll never tell you the tax law. You don't go to, when I was in school, they never said this is the tax law. And as you know, the tax laws favor certain people and punish certain people. For example, when they say go to school and get a job, in other words, become an employee or become a doctor or a lawyer or an accountant, the smart kids, you pay the highest taxes possible. But tax is always revenue neutral. And the tax code of America is really designed to incentivize entrepreneurs. And so if they give entrepreneurs massive tax breaks, which I get huge tax refunds and I make millions of dollars, but it's only because I'm doing what the government wants me to do.
Well, it depends on if you are investing in real estate, for example, I would say yes, there are a lot of tax breaks that favor real estate. No.
Are you a tax accountant?
No, but
well, there's many tax breaks, and I think that's really the problem. If you read the book, you will find in there my tax strategist, Tom Wheelwright, who is a CPA, explains the tax code very simply to people. We're a capitalist country, and the tax code was written for entrepreneurs.
Well, I think the tax code is punitive against entrepreneurs because I think the rates are too high. I'm paying better than 40% of my income in taxes. And I don't see how the tax code is friendly to me. In fact, for example, I just started this radio station, and right now it's losing money. Yet I can't deduct any of those losses against my salary as CEO of Euro Pacific Capital, so I have to fund the losses out of pocket. I can't write it off against other forms of income.
Well, Peter, that's my whole point. Did you go to school to understand tax law?
Well, I went to school like everybody else to have a good time. And I graduated, and then I started working.
So Peter, I'd like to ask you to let me speak for a little while on this. So read the book. You'll find out the tax code was written for entrepreneurs. You've really got to understand that. So there's more than one way to skin the tax code. 90% of it is about how to not pay tax.
Well, I certainly know there is an army of accountants and lawyers that are paid a lot of money to help corporations figure out how to exploit those loopholes and reduce their taxes. No question about that.
Amen. GE paid $200 million to avoid taxation. And what I do is I follow the rules of the major corporations. And that's why unfair advantage is what school will never teach you about money. And so what you're saying to me is part of the problem. People don't understand it. So I made millions of dollars. I got a $2 million tax refund last month. And because that's what I studied. I have very good teams. Most CPAs are not very bright people. That's the problem. And if you're going to be successful, you have to have very bright CPAs. The other thing unfair advantage is about is not only does tax make you rich, but debt makes you rich. Unfortunately, because we have no financial education in our school systems, we're creating peasants out there.
Yeah,
people who work for guys like me.
It's not actually the debt; it's the inflation that wipes out the debt, that transfers the wealth of the savers to the debtors. So yes, so it's not the act of going into debt; it's the government's inflating those obligations away, and that's why inflation is nothing more than a transfer of wealth from the workers who have savings to wealthier people who have financial debt.
Yeah, I mean, that's exactly it. So what are you going to do about it? That's all I've been saying. What are you going to do about it?
And the kind of debt that most Americans have is credit card debt or student debt. And that's not the debt that makes you rich. That's the debt that makes you poor.
And that's why I say our schools don't tell people that. They don't teach you that. See, the problem with the schools, when they say we have financial education, so we bring in the bankers and we bring in financial planners to tell people to put money in a 401k and a mutual fund. Well, those are the guys that caused the financial crisis. And that's the school system is complicit because they're failing to give people adequate financial education. And that's what unfair advantage is what they will never teach you about money because they don't want you to know.
Well, most of the teachers in the school system have no money. They're teachers, and they've never done anything. They're the old expression, those who can do, those who can't teach.
Yeah, but understand
so they can't do anything else, so they're teaching.
Please, I'm not trying to degrade the teachers. I'm saying it's a system designed not to keep us in the dark. So the teachers are just pawns in the whole thing. That's why they're protesting at Madison, Wisconsin for more pensions. They want to work less and get paid more. Well, that's communism. And that's the problem, is they don't have any financial education. And all unfair advantages is how a capitalist thinks, because most people come out of school thinking like socialists or communists. The government's going to take care of me. The government should take over this. That's communism.
But
the government should take care of me. It's socialism.
I mean, what investments have you been making? I mean, where are you investing your own money?
Nothing has changed, Peter. Nothing. I invest. I have businesses. I have massive tax breaks because I have employees. I invest in real estate because I provide housing. I use debt, so I use investment debt. But
what tax breaks do you get from having employees?
I get to write off a lot of my expenses. Your losses you can write off. I have a lot of employees.
But you're writing off the salary that you pay them. So that's, if you paid in salary, so you don't pay it in taxes, but you had to pay it in salary, it's still money you didn't earn. I don't see how I'm getting a tax break because I employ over 100 people. Yes, I write off from my corporate income taxes the salaries I pay my workers, but that doesn't help me because I paid it in salaries. I don't have the money anymore.
Well, Peter, you need a new accountant.
Maybe. I got to have a talk with my accountants because, like I said, I'm paying a fortune in taxes. I can't seem to find any breaks.
Well, that's what unfair advantage was written for.
Well, I got to read the rest of the book because I was in the first third and it didn't have any specifics on what I should do.
Yeah. Well, you have to have my book. There's 5 authors of it. They're all my advisor teams. Mm-hmm. And if you have a bad CPA, and there's a lot of bad CPAs, just like there's a lot of bad congressmen and senators who are attorneys, you're in trouble. So you have to understand, just read Unfair Advantage. It's about how debt and taxes make you rich.
All right. Well, you know what? I'm going to be thinking about that. Maybe I need to make some calls to look for some other accountants. But don't go away. We'll continue this conversation after the break. You're listening to Peter Schiff and Robert Kiyosaki on SchiffRadio.com.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back, everybody. We're continuing our discussion with Robert Kiyosaki. And, Rob, I think, one of the things, at least for me, I think the real reason that you can build wealth as an employer, as an entrepreneur, versus just collecting a paycheck from somebody, it's not necessarily the tax code. It's the freedom that once you successfully create a business, which is not an easy thing to do, which is why very few people do it, not only do you make money off of your own efforts, but you make money off of the efforts of all the people you've hired and of all the capital that you've accumulated, and it allows you to enjoy a lot more leisure because now you have an income stream that you don't have to physically be there to generate it. And, the socialists will say, well, that's because you're exploiting your workers, but they're not exploited. The only reason they can earn that salary is because I hired them. So everybody benefits, but I benefit the most because I contribute the most. And I think when people just constantly have to show up 9 to 5 to collect a paycheck, they never really can get that level of financial freedom.
Well, that's a general rant, but there's a lack of financial education. There's just a lack, that's what unfair advantage is, what school never teach you about money. You have to understand the tax law. The tax law punishes employees. I'm not against employees, but the IRS is. The same as doctors and lawyers. Doctors and lawyers pay the highest tax rate in America.
Oh, I definitely agree. You've got if somebody is just if someone has capital, and I've mentioned this that I think this is unfair. The capital gains tax is 15%. So if somebody, let's say 2 people,
long-term capital gain.
Yeah, but so let's say 2 people inherit a chunk of money from a deceased father. Let's say they each get $500,000. And one guy takes his $500,000 and invests in a medical education. He goes to school and he stays and he uses the money to pay for his education and become a doctor. And then he gets a job as a doctor and he has to pay 35-40% income taxes on what he earns. If the other guy takes his $500,000, and let's say the other guy takes his $500,000 and just starts trading and speculating in things, and he gets capital gains, he only pays 15%. So why should labor be taxed higher than capital? I don't think it's fair. It punishes labor, and it's one of the reasons that workers are falling further and further behind.
Well, Peter, if you let me talk, I'd be able to explain that to you.
Go ahead. The mic is yours.
there's two types of taxes in the investment world. Okay, there's capital gains and cash flow. In the accounting world, that's called portfolio income, which is capital gains. There's also passive income. If you have passive income and you invest in real estate, you have massive tax write-offs. So the way I strategized my life starting in 1973 was that my rich dad said to me, I had to take real estate courses. And I said, why? He says, you have to learn to manage debt. And second, I had to learn how to sell so I could be an entrepreneur. So today in my business, and I'm not a small business owner, I have large holdings. I make so much money, but every time I'm making money, I have to buy bigger pieces of real estate, large apartment houses. I was just in San Antonio, picked up another 1,100 apartment units from the bank.
I know you're doing the 1031 exchanges so that you can.
Peter, let me finish, please. Yeah. Look, if you want me on your program, I'm giving up my time. If you want to, this is going to be the Peter Schiff show with your philosophy, then all your audience is going to learn.
All right, go ahead.
I'm just explaining to you the way the system works is you have to be an entrepreneur in basically business, real estate, oil and gas. The moment I don't like stocks. Stocks are for losers. That's gambling. But I know people make a lot of money in it, but that's not my game. So everybody can have a different game. I'm not saying it's right or wrong. It's not my game. But the moment I invest in my oil well, I get a 28% return on my money immediately. So let's say I put in either 10,000 or 100,000 or a million. Let's say I put 100,000 in, I get $28,000 back immediately. 28% return on my money via taxes. Mm-hmm. The average person doesn't understand that. So the reason I can pay no tax is because I make a lot of money in my business, but I'm converting it from ordinary income into passive income. I don't do the stupid thing about, the price of a stock went up, so I made some money. That's capital gains. Capital gains is 15%. Passive income can be 0%.
Right. You have a lot of.
But that's what people have to understand.
Well, that's what I said earlier in the program.
I don't do stock trading. I don't flip houses.
Yeah. Well, we don't.
And that's what people think investing is, and that's gambling.
Well, I agree that if you're just buying stocks because you think they're going to go up, you're gambling. But if you're buying them because they have good value and you're collecting dividends, you're making investments.
Dividends are taxed at the highest rate possible also. That's what I'm trying to say to you guys.
Yeah, I understand.
Without a financial education, you'll do what Wall Street and the banks want you to do, which is trade stocks.
Right, but everybody can't just keep scaling up commercial real estate. And I think that the tax code
in commercial real estate, Peter.
Well, but that's where you're buying all these big properties in order to avoid paying the capital gains. Every time you sell one, you have to buy another one.
I don't sell them, Peter. I don't sell them. You think like a flipper. You're the capital gains guy. I'm a cash flow guy.
But I don't. You just said you bought the big apartment units. Wasn't that because you weren't doing a 1031 exchange?
I'm trying to, Peter. You got to listen. I buy it because I have so much other income. I'm converting ordinary income into passive.
Okay, all right. So as you generate income, you're buying more commercial real estate. Are you worried about a downturn in the commercial market with, let's say, a big double dip recession with higher interest rates? Are you worried that you might be overexposed in real estate?
I'll make more money because I don't buy for properties to go up. I am not. See, every time you say, well, my net worth is this, that's capital gains. Mm-hmm. My stock went up, that's capital gains. My house went up in value, that's capital gains. That's why people are in trouble. If you read Rich Dad, Poor Dad, the magic word is cash flow. That's also called passive income.
Right, but in order to get...
These are all tax terms.
Yeah, but in order to get the cash flow, you have to have your tenants paying rent. So if there's a really bad recession, what if your tenants can't pay the rent? Then the cash flow goes away.
That's a very good question. Why am I in San Antonio is a better question.
Well, probably because Texas has got a better economy because of oil, and they got no state income tax.
Actually, the biggest thing in San Antonio is a company called USAA, 116,000 employees. My buildings are right next to their places, and they also have huge medical complexes. So real estate is based primarily on debt, and not debt, on jobs. And so as long as there are jobs, and the government sponsors jobs, you'll do well.
Yeah, I agree. So one of the important things before you buy a piece of property is you need to look at these other situations to find if you always will be able to have tenants to rent it out. Now,
Peter, all I'm saying is this. You're not going to learn this crap in school, okay? You've got to I take weekend courses. I'm constantly learning about real estate, oil and gas. I understand tax law, asset protection, stuff they don't teach you in school, and that's what unfair advantage is. What school will never teach you about money. They're telling you to go to school and invest in a 401k and save money. That's the worst thing you can do from a tax perspective.
If you're going to collect a paycheck, though, it does make sense to take some of that money and put it into one of these retirement plans, because otherwise you're going to pay taxes on it. At least if you put it in there, you can defer the taxes.
That's bullshit.
So you would advise against putting money into an IRA or any kind of retirement account, a pension? You would forego all that?
If you have no financial education, that's the best you can do. With a little bit of financial education, I don't have a 401k. I retired years ago at 47. My wife was 37.
But you don't have any
financial education. Saving money and a 401k is good, but from a tax perspective, you're paying ordinary income on it. It doesn't make sense to me. I don't have to do that bullshit.
Yeah.
That's what I'm trying to say. That's what a financial education will do. It'll give you more choices. You say, well, I don't want to do what Robert does. I think I can do it this way. Good. But you have to make an educated decision. If you don't have an education, you'll put your money into a 401k. You'll buy a house, say it's an asset. If you read my stuff, I've always said your house is not an asset.
Oh, I know. I read that, and I 100% agree that a house is like a car. If you live in it, you're consuming it. It's depreciating. Investment property is an asset. Your residence is no different than your boat or your car.
No, I'll tell you what. I'll tell you something else. My boat, when they extended the Bush tax cuts, I bought a new boat in France. I got a 100% tax write-off. The reason for that is because I put it into my charter business. See, I think like an entrepreneur. I don't think like a consumer. That's a very big difference. And the tax laws favor entrepreneurs, and they punish employees and doctors and lawyers who consume. If you can understand that, you'll understand my book. What school will never teach you about money? Unfair advantage.
All right.
I have made more money this year, and I paid nothing in tax legally because I'm doing what the tax department wants me to do.
I envy you tremendously. Anyway, thank you for coming on to the show. I will make sure and read the other 2/3 of this book and have a discussion with my accountants. Anyway, thanks. Don't go away, everybody. We got another full hour of the Peter Schiff Show coming up on SchiffRadio.com, the gold standard in talk radio.
You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on Earth.
The Peter Schiff Show is on.
Call in now. 855-4-SCHIFF.
That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
your freedom.
The Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff at SchiffRadio.com. I have several people on hold. I will be taking calls momentarily. If you want to call as well, 855-4-SCHIFF. Before I do, let me talk a little bit about, I got contacted by several reporters who apparently, maybe they were researching Glenn Beck because, as you know, Glenn Beck announced yesterday, or maybe some of you don't know, he is leaving Fox. There has been speculation for the past week or so, and that's probably why a lot of these left-wing reporters were doing research. I mean, they probably consider it a big victory that Beck is going to be off Fox. Although apparently Glenn is saying that he is still going to be producing specials and doing things with Fox, so working with Fox, just not doing his daily show at 5 o'clock. But it appears that he has got some kind of plans. I don't know what they are, to either acquire his own television network or more likely expand his video show online and maybe just produce directly his own show. So maybe the interest in what's going on with Beck prompted some people to do some research. And somebody, I put it as a favorite on my YouTube. I didn't make a YouTube about it myself, but I put it up there so you can check it out. But I spoke about the fact that my inability to be a guest on the Glenn Beck show. And I said that my guess was that the reason I'm no longer a welcome guest on his radio or TV show was because of my criticism of Goldline. And so, and for that reason, I said I had lost some respect for Beck because I had originally thought that he recommended Goldline mainly because he didn't realize, he didn't understand the industry, and he had no idea what a bad deal his audience was getting. And that once I informed him of that, I had expected him to take some action, and rather than distance himself from Goldline, he distanced himself from me. And so I wanted to put that out there because I was on the record of saying I didn't think Beck knew how much companies like Goldline was ripping off his audience. I now think he knows. I just don't think he cares. And the way, and I'm just guessing because I haven't been able to talk to Glenn Beck, but the way I think he justifies it, because I think Glenn is I think he's a good guy, and I think a lot of what he's saying is right. Not everything. Some of the stuff he says is over the top, but a lot of it is not. And a lot of the warnings that he is offering. See, the left accuses him of fear-mongering. He's not fear-mongering. I mean, the fears are real. It's the people who are complacent that need to wake up. And I think Glenn believes that people need to buy gold and silver, just like I believe it. And the way I think he rationalizes sending people to Goldline, when he knows they'd be better off buying their gold almost any place else, is that he needs the advertising money to stay in business and get his message out. And maybe he thinks that, and I'm sure there are a lot of people who bought gold from Goldline because of Glenn Beck. And without Glenn Beck, they never would have bought any. Now, true, many of those people would still be better off had they not bought any, even though gold is way up, because it's not up enough to cover the horrific markups. But it's someday in the future, when the dollar crashes, everybody who bought gold will be better off, even the people who bought it through Goldline. Yes, they would be much better off if they bought it someplace else, but they're going to be better off than the people who didn't buy any. And maybe Glenn Beck thinks in order to get his message out there to as many people as possible, he has to hold his tongue and promote a company like Goldline, because maybe he thinks that without them, he wouldn't have the large platform that he has. Now, does that justify it? I don't think so, but maybe mentally that's how he gets there. But apparently this reporter saw my criticism, and so now they wanted a couple of them, some big liberal magazines. And my initial instinct was not even to talk to them, because I'm afraid whenever you talk to these guys, they take you out of context, and I didn't want that happening. But now they've been so persistent, I'm responding to one of them in writing. But one of the guys actually seems like he's trying to attack Beck and me. He's trying to allege that I'm a hypocrite. And he was making a big deal about my appearance on the Alex Jones show and some comments that I made on my own show where I criticized Glenn Beck for recommending a Goldline, but he said, hey, you're doing the same thing. You're telling people to buy gold through Euro Pacific Precious Metals. That's your company, so you've got the same conflict of interest as Glenn Beck. There's a huge difference there. Number one, when I tell my audience to buy gold from my own company, they know there's a conflict of interest. They know I own the company. I mean, I don't make any bones about that. So if you're listening to this show, if you call up Euro Pacific Precious Metals and buy gold, then I'm making money off it. And because you know of the conflict, it's fully disclosed, and my audience is probably more likely to check around and make sure that I'm not recommending the company simply because I own it. I'm recommending it because I know you're going to get a good deal. In fact, I'm recommending it because I know you won't get ripped off. But people will check it out. But when talk show hosts, and it's not just Glenn Beck, it's all these talk show hosts, when they recommend a gold company and they don't tell you that they're getting paid under the table or that they're really recommending them because they need the advertising, I mean, that's a bigger conflict of interest. And the audience doesn't generally perceive that as a conflict. A lot of times people think that the reason that Glenn Beck is recommending Goldline is because he's checked around and that's the most reputable, the best deal that he could find. And that's not true, but that's what people think. That's why a lot of people just blindly do what they say. Now, the media thinks, well, what, is his audience a bunch of morons? Are they really that gullible? Are they stupid? I mean, the guy on Lawrence O'Donnell says that the Fox audience is the stupidest, most gullible audience on earth. They're not, but they're trusting. And the problem is a lot of people who are buying gold because of Glenn Beck, they're first-time buyers. They have no experience. I'm glad that Glenn Beck is getting them to buy gold. It's just unfortunate that he's having them do it through a company like Goldline when there are plenty of other companies out there, not just mine, but there are plenty of companies out there. I mean, for example, if somebody wants to buy $10,000 worth of gold, at Gold Line, and they have an idea, and they call up and say, yeah, I'd like to buy $10,000 worth of Maple Leafs. They're going to get talked into buying, these French roosters or some other European or proof coin. And even on the Gold Line ads, they say, are popular European coins. Yeah, why are they popular? They're popular because the brokers make 20 times the commission if they push those coins as opposed to something like Maple Leafs. So in order to buy $10,000 worth of gold, if you're buying the French roosters that Gold Line is selling, you actually have to send Gold Line $16,500 because they mark those coins up 65% above their cost, which is about what they would pay to buy them back, or the value of the metal. So in order to get $10,000 worth of gold at Gold Line, you need to send Gold Line $16,500. In order to buy $10,000 worth of gold from my company, you got to send me maybe $10,200 or $10,300. That's it. So there's a big difference between telling somebody who wants to buy $10,000 worth of gold to go to my company, where we charge them 2 or 3%, versus a guy like Glenn Beck saying, go to this independent third party that is trustworthy, that's been around for a long time and is the best place to buy gold, and you end up paying $6,750 to buy what you could have bought from other dealers for $200 or $300. There is a huge difference, but apparently this reporter couldn't tell. Hopefully when he gets the answers to my questions, he'll figure it out. But the main reason I'm even participating in the article, because it seems like he's also going to be trying to attack me. So now that it's not just attacking other talk show hosts, it's meant to attack me as well. I wanted to defend myself. But anyway, I thought I'd give you the heads up because I thought it was an interesting a circumstance that was happening. And it seems like, too, the only media that wants to, kind of go after Beck on the Gold Line story is the far left. Nobody on the right wants to touch it, which I also think is disappointing. And ultimately, I think that the left is going to be able to use this as a way to discredit all of the otherwise good things like people like Glenn Beck and other conservative talk show hosts are saying, and it validates everything the left thinks about business. Because after all, these firms are ripping off their customers, and they're the ones that are being recommended by the talk show hosts. So it confirms all the worst fears of the liberals about greedy businessmen ripping off their customers, when the vast majority of gold and silver dealers aren't ripping off anybody. They're doing a valuable service at a competitive, fair price. Anyway, I'll be back with your calls after the break. Don't go away. This is Peter Schiff on SchiffRadio.com.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
Welcome back, everybody. This is Peter Schiff on SchiffRadio.com, and I am taking calls 855-4SCHIFF. First in the queue is Frank in Garden City, New York. Frank, how you doing?
Hey, Peter, thank you for taking my call.
Thanks for calling in. What's on your mind?
My question for you is, if I know you mentioned at times before that you felt that the Dow to gold ratio may be going to 1-to-1, and if the stock market is rising in part because of inflationary fears, where do you think those two numbers will meet, if you still think that they'll meet?
Yeah, I had this question, I think, the other day. I don't know where they're going to meet, but obviously if the Dow continues to rise, they're going to meet at a high number. I don't know that the rise will be continued. Maybe the Dow will fall. But if the numbers rise, it might be, they might meet at 20,000. Maybe the Dow and gold, Dow will be 20,000 and gold will be 20,000. More likely, they're going to meet at a lower number. I think, in fact, they might meet at a number that is lower than the current value of the Dow. Maybe they'll meet at Dow 6,000, gold 6,000. I don't know where they're going to meet, and they might not get all the way to 1-to-1. They might get to 2-to-1. I mean, but 1-to-1 is kind of like a target that if you get anywhere near it, that probably means that the Dow is cheap, because that's what it's meant before. And I'm not saying I think the Dow is worth a lot more than an ounce of gold. It's just that in the past, when you have had the end of major bear markets, you have had ridiculously low stock market valuations. And I think the Dow at 1-to-1 with gold would mean gold was very overvalued and the Dow was very undervalued. And so that's a target. There was a very good article. I just read it. It was written by Frank Holmes from U.S. Global Investors. It's up online. The title is "The Bedrock of the Gold Bull Rally," and he makes a lot of good points. And actually, a lot of these points were Mark Faber's points, and he's just pointing them out. Back in 1968, gold represented close to 5% of the world's total financial assets. Today, it represents less than 1% of the world's total financial assets. He looked at the percentage of gold holdings in mutual funds and for pensions, and it's minute. I mean, it's not even 1%. I mean, it's such a small percentage. And so for people who are saying there's a bubble in gold and silver, he points out that it's not even close. And in fact, the volatility is so low because we've had a very slow, steady rise for a long period of time that gold doesn't have any characteristics that any bubble has ever had. And so it shows to him that gold still has a long way to go on the upside. And sure, nobody owns it yet. Everybody claims gold's in a bubble, yet nobody owns gold. Everybody claims it's in a bubble. Nobody owns gold stocks. So we haven't even had the capitulation yet, which is my point that I'm going to make on CNBC. The bulls still haven't bought gold. They still think they're making money in the S&P and the Dow, and they're oblivious to what's going on in the precious metals market, despite the fact that the Huey is up 1,200% during a period of time where the Dow, the S&P are flat. They still think they're right buying stocks, and they still think the bears are wrong for buying gold.
In the same context, then, because I'm trying to wrap my head around this whole thing, if the dollar index is at about 75 right now, I mean, I know you can't nail it perfectly, but how much further down do you think it could go?
Well, I wrote in my book, Crash Proof, that my minimum target for the dollar index is 40, and right now it's 75. So, and I think it could go a lot lower than 40 given what's happened since I read my book. So maybe now we'll go down to 20, which is a huge loss in the dollar's value relative to currencies like the euro, because the euro is a big chunk of the dollar index. But I think the dollar will fall more against the currencies that are not really in the dollar index. So it's not even a really good benchmark, and it will fall more in terms of gold and silver.
All right, by the way, one last thought for you. I thought your interview was great just now. What I found interesting with that guy, Robert, was that his lack of disclosure. I mean, I appreciate his thoughts, but he seemed pretty brazen about it. You know, being in the financial industry, you pretty much have to disclose the risks associated with what you're doing. I was amazed at how little he was worried about that.
Well, he's not a licensed broker like me. He's an author, so he has First Amendment protections. He can say whatever he wants. I can't. You know, once you decide that you're going to be a stockbroker and you have a Series 7, you give up your First Amendment rights. So that's an unfortunate consequence of a regulated environment that I'm in. He's not operating in a regulated environment. And in a way, look, I envy the fact that he's making all this money and paying no taxes, because I'm making money and paying a ton of taxes, and that's wrong. I mean, that's why the tax code is so unfair. It should be neutral. See, he is doing things that the tax code have encouraged him to do. And while it's good for him, it's bad for the country. We don't want the government to write a code that forces people to behave in a certain way. People need to behave in the ways that is the best, you know, for the country, which is to be the most efficient allocator, combiner of resources, to satisfy demand, not to organize your finances to avoid taxes. But it certainly works for him, and I'm sure it works for a number of people who have followed his advice. You know, I didn't make my money that way, and so I'm paying a lot more taxes. But I definitely really think that I should have a talk with my accountants, because there's got to be a way for me to pay less taxes, because I'm paying a ton of taxes. I paid more taxes than General Electric, and I didn't make anywhere near as much money as they did.
Thanks for your help, Peter.
All right, thank you. Next up is Tony from Las Vegas. Tony, you're on with Peter Schiff.
Hello?
Yeah, Tony, it's Peter Schiff.
Hello?
Yes.
Hey, Peter, how you doing?
Good.
I have a question about the gold-silver ratio.
Uh-huh.
I read an article that in the last 100 years it was about 30 to 1, but before that, the thousands of years before that, it was about 16 to 1. My question is, what would the ratio have to be in today's world for you to think that silver is now gold is now undervalued compared to silver, where right now silver is undervalued compared to gold? What would that number have to go to?
My benchmark is basically a 20 to 1 ratio, because that was the legal ratio that we had in this country. The dollar used to be defined as either 1 ounce of gold or 20 ounces of silver. So when we were on a gold and silver standard, that was the ratio. And it was hard to keep it that way, and sometimes it created problems in the economy when the ratio really was skewed. But that's what it was, $1. So it was always 20-1 until we went off the gold standard, or until we devalued, because we devalued in Roosevelt devalued in 1932, and he took the dollar from 20 to 35. So once they did that, then it changed the ratio of gold to silver. But yeah, it was 16-1, 20-1. I mean, whatever it is, I still think that historically silver is still cheap relative to gold. Although right now, I think gold needs to rise, because I think you've had a huge move in silver, and gold has lagged. And I think you're going to see some type of correction in that move where you're going to get a pullback in silver relative to gold. I think it's more likely to happen with gold rallying, but it can also happen in a correction. And if we have a correction right now, believe me, silver will correct quite a bit more than gold. Anyway, thank you for calling. Don't go away. We got more coming up after the break. You're listening to the Peter Schiff Show on SchiffRadio.com.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio, the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff. And, I just was reading an article relevant to our last discussion that mentioned that silver is the most expensive versus gold that it's been since 1983. But, of course, for all of the 1980s and 1990s, gold and silver were in bear markets. And so silver was losing value faster than gold. Now we are in a bull market, and so are returning to more bull market typical relative valuations. And as I said, I expect that trend to continue over the next several years, although right now I think it is stretched a bit in silver's direction, and I expect gold to see some gains relative to silver, either because silver falls more than gold in a correction, or gold has a bit of a rally and outperforms silver on the upside. Either way, it's still going to be a bull market. The rhetoric is heating up in the discussions leading up to the potential government shutdown that's coming up, particularly coming now from President Obama. I have some rather interesting clips of Obama talking about what we have to worry about if there is a government shutdown. First one, I'm going to play cut number 6.
And if we don't reach common ground by Saturday, the federal government shuts down. And some of you may not be that sympathetic. You may say, well, let it shut down. What do I care? Folks who were planning a vacation to Yellowstone. Well, it turns out national parks, suddenly you're closed. You're out of luck. You may have to try to figure out if you can get your money back for that resort you were going to stay at. I mean, these are things that affect ordinary families day in, day out.
All right, so the country is teetering on the edge of fiscal Armageddon. And the reason we can't do anything about it is because it might interfere with somebody's vacation to Yellowstone Park. Who cares? We have got bigger issues. We're going to bankrupt this family. We might have to turn over the deed of Yellowstone Park to the Chinese if we don't get our act together right now. This whole rhetoric is ridiculous. And, of course, the biggest problem is we're arguing about nothing. The Republicans are threatening to shut down the deficit if the Democrats don't cut another 10 or 20 billion. That's peanuts. It's less than 1% of the budget. If we're really on the verge of disaster, even if the Republicans get everything they want, it's not going to avert it. Here's another example of this kind of rhetoric. Obama, cut number 4.
There was a interview that was done tonight on one of the nightly news networks. A man from Kentucky named J.T. Henderson. He said he's counting on his tax rebate because his family's been scraping by, and he might not get it if the government shuts down. So J.T. said if he could speak directly to all of us in Washington, he'd tell us that all of this political grandstanding has effects as it trickles down to normal, everyday Americans. I could not have said it better myself. A shutdown could have real effects on everyday Americans.
Yeah, one of the reasons that this guy is struggling to make ends meet is because the government took his money from him in the first place. That tax rebate is the money that he's getting back, but the reason he needs it is because the government, President Obama, took it from him in the first place. And why is this man struggling to make ends meet, scraping by? Because the government is spending so much money that they have to tax him so much money that's why he's scraping by. So if President Obama really feels for working Americans who are scraping by, how about cutting government spending so that we don't have such a big burden on the private sector? So maybe we don't have to tax them to death so they don't have to scrape by. They can get by the way Americans used to get by when we had a high standard of living for the middle class, because the middle class didn't have to support an army of government bureaucrats and government workers. Like I mentioned the other day, we now have twice as many people working for the federal government as working in manufacturing, mining, agriculture, utilities, forestry, fishing, and a whole number of other industries combined. All these people are producing nothing when they should be producing something, and now the people who are producing have to pay enormous taxes to support all the people who aren't. That's what President Obama should be concerned about. Anyway, phone lines seem to be freeing up. I think I lost a few of my callers, so if you want to call up 855-4-SCHIFF, 855-4-SCHIFF to get on the show. I'll take a call from Tulsa, Oklahoma. Lori, you're on with Peter Schiff. Lori?
Hey, Lori.
Yes, you're
it's
on.
Me. Oh my gosh, I can't believe I'm on. Thank you so much for taking my call.
Well,
I listen to you all the time.
waiting.
I love your show, and I think it's terrific in every way. So thank you for the services that you do. I really love listening to you. You're brilliant. Okay, so anyway, here's my question. Are you still there?
I'm listening. You were saying such complimentary things.
Okay.
I didn't want to interrupt you. Go ahead.
Oh. Okay, well here, thank you. Okay, here's my question. The S&P 500 keeps going up, and the Dow keeps going up, and I keep thinking that it's going to go down because of all this craziness. And I was wondering if you can explain why it's still going up.
Well, as I said, it's going up because the Fed is printing money. So it's not really going up, it's going down. But you can't see it because the dollar is going down. It's like if you're in a car that's going 10 miles an hour and there's a car next to you that's going 15 miles an hour, it looks like you're going backwards. But you're not. You're just going slower than the other car. And so when you're measuring stocks in terms of dollars, the dollar is losing value faster than stocks. So it looks from a dollar's perspective like stocks are going up, but they're not going up. They're just going down more slowly than the dollar. Does that make sense?
Okay. Yeah, it does. Okay, and then let me ask you this as a continuation of the first.
And let me make one more point, that when I say the dollar is going down, it's not simply measured against other currencies, because they're going down too. It's measured against gold and silver, or maybe oil or corn or some of these other things. And so if you price the Dow in silver, for example, you see how much value it's losing. Yeah. So
yeah.
What was your next question?
Okay, my next question. Okay, if you wanted to short the S&P 500, put a put on SPY or SPX, then what is it that you would look for that would trigger the downfall of the market? Would it be something with the interest rates on the treasuries, and for which ones, or what exactly do you look for?
Well, I believe
when is ideal time to short it?
Well, if the Federal Reserve actually does not have QE3, even under the table, if they actually allow a big increase in interest rates, then I believe the market will get killed. But my feeling is they're not going to do that. All right, they're going to try to keep the market propped up, which is why I'm not recommending that people short the market. It's a very speculative trade. But if you do want to be short, the way I would try to approach it would to be have kind of like a market neutral type of portfolio, where you were short some stocks and long others. Like you can be short financials, you can be short home builders, you can be short retailers, and then you can be long resource companies, industrials, exporters. So you can try to build a portfolio where if the market goes up, the stocks that you own go up more than the stocks that you're short. And if the market goes down, the stocks that you've shorted will lose more value than the ones that you own. I think that's a better approach to the short side. But it's more sophisticated to try to put together a portfolio. And obviously before anybody does anything, they got to really understand the risk, because shorting stocks are not for everybody, and so you need to know what you're doing.
Exactly. Well, thank you so much for taking my call, and I think I hope you keep up the great work that you're doing. I appreciate you so much.
Thank you very much for calling. Well, we're starting to see a little bit of a pullback in the market and a rally in the yen. Those things have worked in opposite directions. The yen is finally rallying after falling sharply. And, in fact, the yen is rallying. The Aussie dollar is now negative after making a new record high. So I think you've got some cross-trading going on between the yen and the Aussie dollar. Anyway, we'll be back with more of your calls on the Peter Schiff Show at schiffradio.com.
Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back. The final segment of the show has arrived, and we've got an influx of callers for some reason. So if you're not already on hold, don't bother calling. I'm going to try my best to get to all the people that are currently on hold now. I missed a great opportunity to promote this show. I don't know why I didn't think of it yesterday. I lectured at the University of Hartford, and actually they initially had put me in one auditorium, and they sold it out, so they had to find a bigger room. I think they had about a full capacity. They had sold out 600 tickets. I think they said I was the most popular speaker they've had so far. It's glad to see the young people at universities there interested in what I have to say. Hopefully a few of them, though, are listening to this show anyway, but I really should have mentioned it. I don't know. I was probably tired. I had a long day, and I didn't think about promoting my radio show. But anyway, hopefully my audience can do that for me. We really got to spread the word. Talk to as many people as you can. Let them know to listen on schiffradio.com. Let's start, calling some of these local radio stations, asking them to get me into their lineup, because I've got a lot of important information to get out there, and we need to get it out to the widest possible audience so that when the stuff hits the fan, there's somebody out there to explain why it happened and who the blame is and what the real solutions are, because all the government's going to do is continue to pour gasoline on the fire, and we can't afford to do that. Anyway, let me go and try to take these calls as quickly as I can. First up is Jason calling from Omaha, Nebraska. Jason, you're on.
Hey, Peter, how's it going?
Okay, how are you?
Hey, I was listening to your show yesterday when you were talking about the Commerce Clause.
Uh-huh.
And I wanted to add that if you read the Federalist Papers, I think it's either 52 or 56, they actually rewrote the Commerce Clause. Instead of saying amongst the several states, they say between state and state. And so I'm pretty sure what the founders intended was that commerce shall be regulated by the federal government between the states themselves, not the people residing in states.
Oh no, there's there's no question that that's what it means. I mean, there's other references from the Federalist Papers explaining the Commerce Clause, and again, all they really wanted, they didn't want states imposing tariffs on other states. They wanted a free exchange of commerce. They wanted a broad free trade zone area. That's what it was about. It was not about giving the government the ability to regulate commerce. And now, of course, or they regulate anybody who's engaged in commerce. And now they regulate people, individuals who aren't even engaged in commerce, because they say that what they're doing, like the big case that the lawyer referenced. I think what it was about, there was a farmer who, I think he was a cattle farmer, and he wanted to grow corn to feed his cattle, not to sell it, but just to feed his own cattle. And so he didn't want to abide by the government's quotas on corn. But the court said he had to, because the court was going to regulate him based on interstate commerce. And his argument was, but there's no commerce. I'm not selling the corn. I'm just feeding it to my own cattle. And they said, well, it affects commerce because you're growing your own corn instead of buying somebody else's, and that affects commerce. And because you're affecting commerce, we're still going to regulate you. So the whole thing is crazy. And, the minimum wage law is justified based on interstate commerce. Even if I have a restaurant and all my customers are in Connecticut and all my employees are in Connecticut, I still have to abide by the federal minimum wage. How is that interstate commerce? And they're going to say, well, is there anything in your restaurant is there any sugar? Is there any ketchup that was made in another state? And if you're using anything, that is interstate commerce. It is complete nonsense. It is the government usurping power and regulating in places where it's constitutionally prohibited.
That's exactly right. And in fact, they said that the power to regulate interstate commerce would be worthless without the ability to do what you just said. But moreover than that, if you think about, a couple hundred years ago, there was no such thing as interstate commerce. All commerce was conducted pretty much face-to-face because of, there weren't telephones, there weren't faxes.
The only real interstate commerce was when you transported something between the states in a horse and buggy. It was just when you went over the state line, and they didn't want the states basically trying to protect their businesses from other competition. And, there was still, cargo still moved between the states, and that's what they were regulating. Anyway, thank you for your call. And next up is Edwin calling from Sacramento. You're on.
Hey, Peter.
Hey, how are you?
Good. You talk about investing in other currencies and silver and gold, but all the other currencies are still fiat currencies, so why bother with them, and why not just stick with silver and gold?
Yeah, because I don't think that I can recommend that people have 100% of their wealth in just gold and silver, that they ignore everything else, because what if gold and silver have a big drop and you're overexposed? So I recognize that when it comes to currencies, none are perfect, so I try to buy the least flawed. It's like triage, So we own currencies like the Australian dollar, like the Swiss franc, like the Singapore dollar, like the Canadian dollar, like the Norwegian kroner. I'm buying currencies where the governments are making the fewest mistakes. But I still expect all these currencies to lose value relative to gold. But, I'm giving investment advice, and I think it would not be prudent for me to just tell people only buy gold stocks, only buy gold and silver coins. And, of course, there's no income coming from that. So a lot of my clients want income. They want dividends. We don't get it from metals, but we do get it from foreign stocks and from foreign bonds. So, personally, I have a very high percentage of my net worth in mining stocks, much more than I advocate for other people, because I'm willing to take that risk. But a lot of people, there's always a chance that I'm wrong. And I always like to give investment advice. You see, even if I'm totally wrong, even if there isn't going to be a collapse in the U.S. economy or a collapse in the dollar, it doesn't mean that buying foreign stocks is a bad idea. It doesn't mean that the U.S. doesn't have to fail for foreign companies to succeed. But if the U.S. does fail, then it's really important that you own these foreign assets. So I think that you can win either way. You can win if I'm right or I'm wrong. But if you just put all your money in gold, you can only win if I'm right. If I'm wrong, you can have a huge loss. And that's my thinking. Anyway, thanks for that. And of course, you can always lose. There's always risk. I know the regulators are listening, so of course, you'd have to be a moron, right, to follow my advice. But just make sure you understand that I can be totally wrong, and you can lose money on everything that you do. Anyway, hopefully that satisfies everybody. Next caller is Joe, calling from Austin, Texas.
Citations, Peter.
Thank you.
I just wanted to thank you and Ted. I have been listening to y'all for a few years now, and I'm a blue-collar worker, and I don't get to invest, but I do save. And I save in cash, and I save in metals. And I've followed y'all's advice, and it's just been great. And y'all are doing a great service to this public, and I just wanted to tell other people like myself that are in this struggling to hold on to some kind of middle-class existence, that it's a good way to buy some coins, save up some money, buy some coins. It's a gamble in a way, but it's really not. It's solid. Yeah. It's been great for me.
And I want to. Yeah.
I wanted to see, after I hang up, if you could speak to lithium, and if lithium technology is going to get the venture capitalism it needs, and if the mining of the stuff is going to be worked out so that it's easier to get it out of the ground. And talk to the technologies, speak about the technology.
Yeah, I'm afraid I really can't do that with any kind of expertise because I'm really not sure how to answer that question. I'm not really a big investor in lithium. Maybe I should. Maybe that's something that I've overlooked, but I really don't know the answers to those questions.
Okay.
All right.
Well, thanks a lot, Peter.
Yeah, thank you. And another thing that people could do of relatively modest needs is just buy the things that you're going to need in the next 2 or 3 years, but buy them now. I've said if you buy a box of cornflakes for $4 and you eat it 2 years from now, and they sell the same box for $6, you've made a 50% return on your investment tax free. So there are other things that people can do rather than putting money in the bank, which is unfortunate because we need savings, but the government is destroying savings. But thank you for your call. I will try to squeeze in the last caller here, Mark from Rochester, New York. Mark, you got about a minute. What's up?
A minute's not enough, but greetings from the North Coast.
Yes.
I'm calling about the op-ed in yesterday's Wall Street Journal, Our Unaccountable Fed. Did you happen to catch that?
I don't think so. What did it say?
Well, it says some real good stuff. It advocates allowing gold a level playing field on which to compete with the dollar.
Well, that's Ron Paul's bill to do that, and absolutely, we need to remove all taxation, capital gains, income taxation from gold and silver, and that would level the playing field, and that would force the government to be responsible. Remember, the government doesn't want competition for the Federal Reserve. They're putting people in jail and calling them terrorists if they try to compete with the Federal Reserve. Anyway, that's it for today's show. Be back again tomorrow. Don't miss it. This is Peter Schiff on SchiffRadio.com, the gold standard in talk radio.
The Peter Schiff Show.